You're watching today's video technical update presented by FXTimes. It is Monday, May 24th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. This week started rather quietly compared to the opens a couple of weeks ago and last week. Commodity and risk appetite held on to start the week as we saw consolidation in the Aussie dollar, US dollar pair, and a bounce in gold, as well as an extended correction in the pound yen pair. Finally, the euro pound shows that there is still more pressure on the euro than the sterling. The video is being produced at about 3:15 p.m. Eastern Time ahead of today's US session close. The Aussie dollar pair is at a support area. You see here in the daily, this is the 0.8075 area, which the market rejected, was 161.8% retracement of this rally. Basically, a little more than 161.8% of this swing here. So the current swing is expected to have some kind of support at the moment. Even when we look at the weekly, we are testing the 200 moving average in the weekly, so there can be some expected support at the moment. And the market has shown last Friday, a rally last Friday, and today the market is basically in sideways action as we see in this 4-hour time frame. So it's very quiet, very indecisive, Aussie dollar. So what we're looking for is some kind of correction to test this previous support area. Let's we could lay out some Fibonacci levels from the latest swing. And we see that this area is about 50%, 61.8% if the retracement's more aggressive. But it could very well top off in this previous minor consolidation area just below 0.85. So stalk this current rally. One thing we notice is a divergence from the Aussie dollar and gold. Now, as gold rallies, Aussie was supposed to be correlated with gold and continue rallying. However, we saw in the daily that we see the slide since April. Now, if we go over to gold, it's been rallying since April after this consolidation to end 2009 and start 2010. So we are in a bullish mode, and you see a positive reversal here with the RSI, hinting another swing, either using this projection here, that this is the conventional projection, but here as we see, this could be 1, 2, 3, 4, 5. This could be a third wave. So let me just so here it could have been your first wave, and here is your third wave. Okay, and within your third wave, this could be 1, 2, 3, 4, 5. So if this was fifth wave using equality of first wave, then we would be testing the previous top here. Okay, and this level is just about 1250.50 area. Okay, so that's the as we look at 4-hour time frame as well, we see that we're testing this declining trend line. We hit the 200 moving average. So what we can expect is, you see here, this was a 61.8% retracement from here. Okay, looking at this green one, green Fibonacci level, and this is actually, if we measure from down here, it's 50%. If we measure from this entire swing, it's 38.2%. So right now there's a again, there's some support for gold at the moment, and so this rally now tests this declining trend line, and even if it breaks, we can expect some resistance as it nears our 50% and this 50 moving average. And then from there, we may see some kind of trap action or some kind of further consolidation. But after that, after two swings, let's bring up a scenario here where you could have a sort of a Gartley and then a decline from here. Okay, so this is one scenario. For quite another swing for this correction, or we could break above and then we could start our, looking back at the daily, we could start our fifth wave within this third wave. That's the other scenario. Okay, and then so right now we're juggling with these two scenarios, and we need some, we need another week of data to see whether the market is still consolidating in this correction. It may come down to test the 200 daily moving average, or if it's ready to rally for another swing to the previous high here at 1250.50, or maybe even a stronger swing towards 1280 area. Okay, so I wanted to just jump back to the Aussie dollar here, as we have this this rally. If this pullback tops off and continues declining, we can expect it to come down further towards the 0.78 area of this 50% retracement area. Okay, this also satisfies the pattern breakout projection from this topping action. Okay, so that's anticipation for Aussie dollar. Here's a look at the pound yen pair, which reflects the risk appetite environment at the moment. The week started very quietly, as you see here in the daily. We basically have a doji and that opened and closed at the same price level, and we see here actually we are done with a swing projection, and also this is 138.2% retracement of this rally swing. So this is an area of support, and when we look at the 1 hour time frame here to follow this correction, we actually may be nearing the end of the correction. Here is a couple of counts, A, B, C, D, E, and we may be done and heading back down now. However, looking at the RSI here, we have a positive reversal, which suggests further extension of this correction. So here in these are the alternative, which I made in gray. So A, B, C, D, and one more swing up to, it might break the 131 level. As we've seen, our highs are getting higher and higher. This is sort of a diagonal triangle going up here, possibly to the 132 area before we see further decline. Basically, we may be testing this 200 moving average in the 1 hour time frame, along with completing this pattern. Also, a clue here in the RSI is if the RSI doesn't break above 60, we are still in the bearish mode, and we may continue the decline. Looking at the daily, however, we see that we may come down here to the 150% retracement, which is around 125, so that could be the next target. But ultimately, if the market continues lower, it could come down to test this previous low near the 118 level. Okay, so that could be the ultimate target. At the moment, market is consolidating, so keep stalking this correction, and when the market decides its direction, it should be the candlesticks should be longer, should be wider, and it should break out of this consolidation zone, which you could sort of set between 132 and 127. Okay. This means that if you do see topping action, a decline from that should first be anticipated to 127. Only when that breaks, then you should look at the daily, for the next targets like 125 and ultimately 118. Here's a quick look at the euro pound pair. If you remember, the 0.8650 area was an important power line. The market broke below that, attempted to come above, and here last week came above that again, but was rejected sharply after testing the 50 moving average. Okay, so I think the euro at the moment is showing more pressure than the pound is. And here you actually have a negative reversal with the RSI, suggesting a swing projection towards 0.8350. Looking at the 4-hour time frame, some confirmation from that is if the market can break below this 0.85 area, we see that we may have some more some swings before we could break that. So break below that, and the RSI breaking below 40 should help us confirm our swing projection towards 0.8350. That wraps it up for today. Visit FXTimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.